And we are live. Welcome to the Manic Money Finance channel. I am your host, Money Frickin' Mike. And I'm here to discuss with you. So typically, you know me, I don't like to get political. I don't like to talk about, your geopolitical struggles, your politics. I just like to avoid it. But at the end of the day, we have to understand these things affect our portfolios. Your baby boomers felt it today because, as most of you probably know, Israel bombed the crap out of Iran last night. Oh, yes. In epic fashion, people. Epic fashion. Let's face it, they didn't hit their deep underground nuclear facility. They missed a lot of stuff. As most of you probably know, audio is good. So it's just important to understand that the global landscape that we find ourselves in is going to affect our portfolios. It's going to affect the financial markets in general. And it's going to change how we invest. And it's important to understand because my success as an investor, not financial advice, has definitely majority been my ability to recognize patterns. And that is unequivocally my best strength in investing. So, and what I mean by that is I am able to basically see where people are going to be putting their money before they even know they're putting their money there. I did that with Riot, and that's why I just sit on stacks of cash now. You see this? You see this? These are real bills. Okay. No, there's no prop money. There's no. This is all real here. That's a lot. And these aren't fresh. These are old ones. That's how you know it's legit. So, the biggest thing we're going to be talking about today is how can World War III make you money? Some investors already understood this, and they're already making cash hand over fist on oil. So, that's the first one. Oil. Well, anytime there's instability in the Middle East, anytime there's a fight, there's a war, there's a Zionist government bombing the crap out of Muhammad government. Is that the word? Islamic? Mohammedist? I know there's a word for that. Can't think of it right now. But anytime you see that, oil skyrockets. And it skyrockets in the futures market first. And because of that, you're going to see the other markets follow. So basically, once earlier this week, oil was already climbing because Saudi Arabia is basically using price war tactics. I'm allergic to market manipulation. Sorry, people. But Saudi Arabia is using price war tactics to jack up the oil price per barrel, and consequently, West Texas crude, your Murban crude, your Brent crude, that's from Britain, also followed suit. Because this is a global market, people. I'm just powering through this right now. I don't know why I'm sneezing at the moment. This is water. It's definitely not tequila. So, we got a perfect storm in the oil markets because several days after the West Texas crude shot through the roof and the oil barrel price per general went from $60 a barrel, 72 hours, we went from the 60s to almost $80 a barrel. And I'm going to go ahead and bring that chart up, guys. I'm sorry, guys. I'm so allergic to market manipulation. Oh, so yeah. Currently, oil barrel prices are actually around 73. As you can see. Oh, I'm trying to get myself a chart here. Oh, here we go. Let's look at this one. This is a 1 month chart. So at the end of May, crude was $60.79 a barrel. And 2 weeks later, we hit less than 2 weeks later, we hit 75 on June 12th, 74.85. That is wild. Granted, as you can probably see, the OPEC basket, OPEC members, Saudi Arabia, they are at $69 a barrel. So they're actually at a discount right now. And they're basically, that's part of their price war tactics, right? So they jack up their oil barrel price preemptively. And it's just luck, that Israel decided to bomb the crap out of Iran this morning and cause oil prices to skyrocket even more. This is literally just luck. And I mean, if you were invested into oil a couple weeks ago, I saw some people that were basically looking at the chart itself and saying, listen, we are at a bottom. Okay, I'm going to bring up this 1 year chart here. They're saying we are at a bottom. We got an inverse head and shoulders. And then, that's a beautiful $59 a barrel, $58 a barrel. If you bought it on May 5th, it's $57.13 a barrel. The absolute rock bottom. You are a genius. But there was traders looking at oil commodity prices and going listen, this doesn't make any sense. It is literally way more expensive to get this oil out of the ground and get it to other countries. So at $57 a barrel, it's a beautiful thing. Let me just buy on the off chance, and let me do it with leverage, because most people who are buying futures contracts are buying it with leverage. So they're basically using 5 times their money and risking liquidation to buy into this crap. And, it went from 57 to 60s. And then when it hit 65, 66 at the beginning, first week of June, they were like, oh my God, let me close this contract. Nobody would have been able to have predicted that Israel was going to bomb the crap out of Iran, kill top military leaders, take out a nuclear facility, and just absolutely poop on their doorstep, basically. That's what Israel did. Not only did they kick in their door, they cut their gas line and cut off their power, killed the nanny and the butler, and basically they're just ruining that house right now. That's what Israel is doing. And that's why oil prices shot up like they did. It's not something anybody could have predicted, but it is a piece of evidence that shows you that the news is the most important driver of price. So that's a perfect example. I showed you that chart. You had an inverse head and shoulders. That is a conventional chart pattern that will make you lots of money. And anybody who sees that is going to buy in. Most of the people who are reading the charts sold oil barrels at $66. I saw several YouTube influencer traders selling their oil barrels at $66 a barrel. And then this morning, when that crap went down and a bunch of small domestic oil stocks shot through the roof, those same traders were dealing with the FOMO. It's not FOMO at that point because they already missed the train. Granted, I was definitely one of those people. I did not see oil going up. I didn't even see it back when oil hit $57 a barrel. I wasn't watching oil at all. If anything, the war in the Middle East seemed to have cooled down a bit. Seemed to have kind of been at back there somewhere. Like not at the forefront. Like we're past this. Boy, was I wrong. Oh, it's good Mexican water. I had my water imported from Mexico. Complete with the parasites. It's good stuff. Really strengthens the immune system. So, I want to show you the mayhem that happened due to this. So, I'm just going to look at small domestic oil producers. I'm going to show you guys this crap, man. This is crazy. So, HUSA is something that I've covered. It's Houston American Energy Corporation. These guys had to do a reverse split a while back, right? Their earnings suck. This company does not make money. They have like 4 employees. They did a 1-for-10 reverse split literally in the 9th of June, 4 days ago. And because of what's happening in the Middle East and the oil barrel price, I mean, basically, if you had bought this bad boy Thursday afternoon after a already meteoric run, basically with no self-respecting trader would have bought this stock, you would have doubled your money. More than doubled your money. Is absolutely insane. Insane. And I believe I went through these oil stocks the other day when they were freaking going bananas. Yesterday when they were going Wednesday when they were going bananas. I mean, that was back here. I was going over these bad boys. And look at where they are now. Absolutely insane. Indo 9. Right? I mean, all the charts look the same. If I go back, I can actually tell you KLXE, United States Oil Fund. This is all the stuff I was covering back on Wednesday. Hey. What can I say, people? So unfortunately, because of what happened with Israel and Iran, Bitcoin saw a little bit of a correction. The S&P 500 saw a little bit of correction, but I have to say, the SPY recovered quicker than anything. So, I mean, this is what conventional stocks look like. You see this trend line? This is that trend line that we regained recently, where basically that signals we're back in a bull run. And sans Israel attacking Iran, this bull run would have been back on. But because we had some insanity going on in the Middle East, we lost this bull run again. We are back out of this channel. And let me just back up to show you guys. This was that channel. If we had continued into this, For the next couple months, you would have saw a parabolic run at the end of summer, and the S&P would have gone to not only 6,500 but probably 7,000 by end of year because of the dilution of the dollar. So when you have a weakening of the U.S. dollar, it's really important that people who are investing into the system still have confidence in it. It's a very fine line. It's hard because most people who are investing into the system know what's happening on the foreign exchange markets, and they know what the US dollar is doing versus other currencies, other fiat currencies. And therefore, you won't see a crazy bull run when the US dollar is weakening globally. What they will do is they will buy gold. Obviously, we could not dance across that razor's edge this year, and we are already falling back out of that channel. There might be a rebound. Basically, if the United States backs Israel in big time, throws probably $10 to $250 billion at that country in the coming weeks, because basically they are fighting our war for us with Iran. Iran having nukes is not good for America. Iran having nukes is not good for the Middle East in general. It's also not good for Saudi Arabia. Who saw that coming? Because the Saudis, they play ball economically. They might be going after having price wars, but Saudi Arabia does not attack the United States. They do not attack Israel. They are a money-making nation. They are economists. They are businessmen. They're not terrorists. So obviously, this is a wrench that got thrown in the financial markets. I mean, I hate to say it. I can see Israel's viewpoint on this. Iran having a nuclear bomb. I mean, they're just going to use it on Israel when they get it. That's my understanding. That's my, pattern recognition. If Iran gets a nuke, they're going to nuke Israel. They don't like Israel. They literally funded the October 7th attack. We know that for a fact now. Like I said, I do not like to get political because I'm very much a centrist, but there are certain things that are facts. So Blooms did not pop. It was there. It wanted to do it, and we dropped. I got stop loss out of this bad boy today, which is fine. Basically, my gains for the week more than made up for this stop loss. So it is what it is. That was a rough one to deal with on a Friday afternoon after the market closed. But that's how it goes. It is what it is, people. It is what it is. And let's see. Thursday. Was that Thursday Healthcare Triangle? You'll have to excuse me. I'm going to break this down because I don't know. Healthcare Triangle was the last one that I had a pop off of, and it was Thursday. And I told you guys about this on Wednesday. And then immediately on Thursday morning, and I bought at a penny, this thing opened at freaking 2 cents, 3 cents. So I got out the first chance possible. And look at where it is now. Honestly, this is we got this gap here still that didn't fill, but this is kind of looking like a decent buy. Like I would take 10% of the portfolio maybe. Helios Medical, I sold out right here in the $1.50 to $2 range. I think $1.70 is about where I sold out. This thing is looking like a bargain right now. They're dropping PRs. Their last offering was for $3.22 a share, and somehow they're trading for here. So keep that in mind. HSDT, Healthcare Triangle. I like them both for short-term plays. But yeah. Bitcoin warrants today. Still technically kept climbing. This is not even a curved top. This is still a climb, people. It's difficult. It's tough being right all the time sometimes, like it can be difficult, when you're so right all the time. You just, if you predict bad things happening in the future and you're just so correct. What can I say? So basically in the coming months, what happened with Israel and Iran today, you have to learn how to adapt. And granted, the reason that I took a loss today, a small loss that pales in comparison to my gains earlier from the week, is because I basically kept trading under the status quo. So I knew what happened with Israel and Iran, and I figured, we're used to this crap happening. But this is between two nuclear powers, basically, at this point. And I did not act accordingly. Caution should have been. Oh my God. I forgot to mention my day trade. Eurogen Pharma. Oh man. Yeah, I did a day trade today too, guys. I don't normally do these day trades, but as you can see, this one was sweet. Like, I bought in this $12 range right here when it dipped. I bought somewhere around here, around the 12. And, I think I got out around here when it dipped again instead of riding it up to the 14. But, like, that's money. It's money. Who cares? Yeah. I almost completely forgot about that. Unfortunately, I work a full-time job, just like all of you suckers. And, when you're working, it's kind of hard to day trade, because to day trade means you need to be in front of a desk like I am right now, watching your monitors, watching all your different monitors. I have a corner desk, if you couldn't tell. And, analyzing, monitoring, which is funny because I just said watching your monitors. And, to ensure you don't lose your money. Yeah. Yeah. And, I was still managed to make some money off that bad boy. I could have made more if I was able to just, kind of chill in front of the computer in a relaxed flow state of mind, one with the universe, if you will. But I did not have that luxury. So really getting stop lossed out on blooms at the end of the day Friday is bittersweet, really, because basically the majority of my stock money is currently free. It is very much liquid. So if I want to jump into cryptocurrency this weekend, I can with all of it. No problem. Literally no problem. If I want to just, pay some bills, pay the tax man, the tax collector, not the tax man. We all know the IRS is the tax man. The tax collector, that's property taxes. You got to pay to own stuff. You have to pay to own stuff. You know what the one exception to that is? You do not have to pay to own commodities, right? You can own as many commodities as you want because it's hard for them to prove you have those commodities. So this is a 1-day chart of gold, or a 2-day chart of gold. That is insane. Segues into our next segment here. Our next freaking dude, Can't think of the word. Gold is where it's at. So you're wondering, how do I make money off war? This is how you make money off war. And I know you're thinking to yourself, dude, really, did you literally just say is this how you make money off war? If you see the freaking gold chart, this thing is insane. This is a nicer looking chart than Bitcoin. And right now we are forming a freaking multi-month cup. Like this thing could go parabolic at any instant. And you could literally see gold go from less than $3,500 an ounce to $4,000 an ounce in one freaking week. This is what I've been talking about gold. I've been talking about gold plays. And I'm about to tell you how to do that. So, if you want the set it and forget it tactic of investing in gold, you would use a leveraged fund. And there's one in particular that I really like and that I've been watching. Right? It's called the Pro Shares Ultra Gold Fund. Ticker is UGL. All right? Let's get this bad boy up here. UGL. This is a 3-time leverage product. As you can tell, this chart looks very similar to the gold chart, except the price volatility is insane. Insane. And these guys were at $140 a share. They just did a split. Let's see what that split was. Let's see. All right, let's go to the 1-day chart. We had a 4-to-1 split. So it wasn't 140. It was probably more like 120. Yeah, no, it was 140. So we had a 4-to-1 split recently because basically this ETF, you see this freaking gap today. So basically what happened was this ETF became, a little too expensive and they split it off. Every 1 share of the ETF became 4 shares because they are a leveraged gold derivative investment vehicle, and the price was going up too fast. Like, this is insane. Absolutely insane. This is almost double your money in a 6-month chart. Now, imagine if you bought options, leaps on this bad boy. You wouldn't have doubled your money. You probably would have 5 to 10 times your money. And I think we're going to get more of the same. I think this is going to be a similar story to oil, except it's just going to be easy. If you want to buy physical gold, buy the physical gold. Right now, the premium per ounce is only $66. So if you bought an ounce of gold today, the premium on that ounce would only be $66. That gold ounce would cost you $3,400. That premium is nothing. You will make that money back next week. Next week. You see these cups. You see these cups on all these charts for gold. That's how you make money off war. I know it sounds horrible, but you have to understand that if you're not smart enough to move your money around, if you're holding cash like a big gold dum-dum, if you're just holding cash in a savings account, you are the dumbest investor out there. And you're probably not investing if you're holding cash in a bank account. That's insane. Insane when the dollar is devaluing. Housing prices are freaking plummeting. The only assets that are skyrocketing are Bitcoin and gold, and you're holding cash at 1.5% APR. Congratulations. Congratulations. Most Americans don't have enough money to survive for 2 months without a job. And you're keeping that little measly amount of cash in a freaking bank account when it's easier than ever to transfer your money to a brokerage and get it out instantly if you need it. Like, that's just dumb. Dumb. But JP Morgan Chase, Bank of America, Citizens, TD Bank, they all thank you for helping contribute to their bottom line as they make 20 to 100% per month off your freaking money, and they give you 1.5% per year. Dum-dums. There's other ways to make money off gold. U.S. Gold Corp, for instance. So, yeah, yeah, it's the same chart everywhere you go on gold. It's the same freaking chart. Let's look at this 1 day chart. Oh my God, look at that. It fucking rocketed to $14. It finally found some resistance at $14 a share. So that's why I bought a collection of out of the money calls on US Gold Corp because, I'm all about making that money. You should be too. All right. So those are my two gold plays that I'm going to talk about now. I am definitely going to be getting into gold in general for you guys. Here's the 1 day chart on Bitcoin. Oh my God, 8:30 happened right back here, and look at that price reversal right after 8:30. Just like I tell you guys, 8:30 reversal. It doesn't always happen exactly 8:30, but there's always a freaking reversal. It could have been back here. You saw price was trending down. Reversal. I mean, how many times can you be right before it starts to get annoying? It's too much. It's really too much. So let's back up on the 6-month chart of Bitcoin. This does not look like gold. As you can see, we fell out of this cone from February and March. We fell out of this bad boy. Crappy. We plummeted to 76, 75, $74,000 Bitcoin back in April. If you have a bunch of capital, yeah, that would look spectacular. Look at how much money you could have made. Might as well just, put your money into gold. You would have done a lot better. I mean, granted, if you had timed this right and jumped in at 74 in April, it's only been 2 months and we're at 105. You'd be a genius. But let's face it, you could have just set it and forget it and bought a bunch of gold last year and you'd be doing way better off. That's why when people call Bitcoin digital gold, I just laugh in their face because, I am a big believer in Bitcoin and cryptocurrency. And I understand that it gets its backing and its value off the electricity it takes to mine it. But still, at the end of the day, this is not a tangible asset that you can put your hands on. And if you have a bunch of gold sitting in a safe, hidden somewhere deep in the recesses of your house, you have a tangible asset that you can go put your hands on. You can be like, what is that guy? McDuck. DuckTales. Scrooge McDuck. You can go dive into your little pile of gold. His little swimming pool of gold. You can go do that. It's going to be a little different if you just have a bunch of gold coins in a small safe, but you can go have that experience. Whereas with Bitcoin, the best you can do is open up your brokerage, your centralized exchange account, or open up your non-custodial wallet, and you can look at it and see, oh, okay, there's my cryptocurrency, there's my money. That's the closest you're going to get. So, I mean, hopefully this is a stark reminder that a tangible asset like gold is just better. The days of Bitcoin going from $5,000 a piece to $70,000 a piece in 1 year and far outperforming, commodities, those days are over. We'll be lucky to see a 50 to 100% gain from here. I think 100% gain from here is absolutely insane. 200 is the best you're going to get. That mental number of 200K Bitcoin is going to scare away even the staunchest institutional investors and companies. MicroStrategy, who is buying up Bitcoin still to this day, is not going to touch 200K Bitcoin. Not only that, the Bitcoin mining corporations, the Bitcoin miners in general, will be selling their Bitcoin like wildfire at 200K. That's why I think Bitcoin will eventually implode and we will need a substitute of some kind, or it will taint the entire cryptocurrency market in general, and we will never see anything like this again. That's just my 2 cents, though. I got stop lost out of Zora too. I got out of Zora quite a few days ago now. This is an ugly chart. Let's bring it to the 5 day. Basically, I got the heck out around here, around the 9.5 to 9.4 space. It just looked like it was gonna get worse and worse, and it did. Although I do have to say, I do kind of like this chart here. We have an 8.3 bottom, and then we have an 8.4 bottom. Basically, it looks like it's struggling to find footing. As I told you before, the Iran-Israel stuff did affect the cryptocurrency markets as well, not in a good way. And I would honestly say the S&P showed more resilience to the world events and the geopolitical landscape than cryptocurrency did in general. But yeah. Long story short, I still made money. I've been eyeing up a bunch of different equities and asset vehicles. I did leak a couple things today as far as gold goes, stuff like that. But I will be coming at you with a comprehensive list on Sunday. So basically, I am consolidating assets. I'm confident that I have done enough to invest in cryptocurrency. So I'm probably going to pull out of your major altcoins and all that stuff, and I'm going to consolidate my money to the stock market next week. Obviously, right now, I am pulled out of the stock market. I'm pulled out of most altcoins and cryptocurrencies. I am very much happy with my performance this week. I am seeing that basically now that I'm building up a nice nest egg of capital, that I can walk away from my day job whenever I feel like it. And that's really what this is all about. This is all about retiring when you want and not working your entire life away to be some slave to the system. This is what we all want as human beings, is to be free. To truly be free, you need to be able to wake up in the morning and decide what you're going to do, when you're going to do it, and not have anybody to answer to. And that's why I am on this journey myself, and why I hope you're watching this channel. So stay frosty.